How is it going, everyone? I hope you're excited. We're going to be reviewing the M1 Finance portfolio today, titled Millionaire by Age 40. That's right, that's the goal here, and we're going to get there. Despite recording this after a day in which we've been absolutely massacred, let's not talk about the $850 we lost on Black Friday. Let's not talk about it, okay? There's a reason why it's Black Friday, okay? Stocks are on sale. But yeah, what do we have to talk about here? Well, let's go through every single position and show you what we got rolling here. A little bit different from the other portfolio. This bad boy was actually from July of 2018, so I did this pretty much exactly a year after I started the Robinhood portfolio, and you kind of see where this one's gotten in terms of value. Was over 33,000, prior to yesterday. But it's okay. We can account for that. We'll mention that. Obviously, if you consider that with the Robinhood portfolio as well, it's about $5,000 less in value, all things considered. Or really 4,000 actually. It's only 4,000 different, I think. Yeah. Nothing crazy. So this is caught up certainly significantly. Because I've been contributing more to this one than I do the other one. So let's get right into it and let's start talking about some of this stuff. Obviously, again, it's one that I'm pretty heavily focused on dividends here. We're talking about a yield over 3%, and that's kind of how I plan to achieve this millionaire status here. We love it through reinvestment of dividends and really a dividend growth type strategy here. So, if you see overall, good stuff. Look at the all-time numbers here. Market gain of $9,981 and a total earned dividends lifetime of the portfolio of $1,273. Right now, I believe our annual income on this portfolio is right around $800. Should be able to, by the end of next year, it'll be $1,000 in annual income. Mixed with the Robinhood portfolio, we're getting somewhere, folks. We're getting somewhere. We're talking an additional couple grand a year just off of holding these positions, which is very nice. So, overall, that shows with a money-weighted return up 11,255 or 151%. But if you look at just the positions themselves, actually only up 47.21. Obviously, because I missed a pretty big rally in 2017 that I could have taken advantage of. And some of these stocks have been, a little bit of stinkers, but that's okay. 47% or $10,000 solely based off of the unrealized gains here, which is very nice. I'll take it all day. All day I'll take it. There's some inconsistency, obviously, with the charts, as you might be able to tell. Yeah, they have this new earned dividend feature, which I think they plan on fleshing out more in the future. We'll see what that looks like. So let's get into this bad boy. We're going to start with the largest portion of this portfolio. And it's going to be in a pie that I've labeled dividends. Obviously, I've messed this one up just slightly, and it's not the world's easiest thing to move around slices here. You have to completely halt the account for a little bit just to move slices around. So there are some changes I would like to make, but here's the original. When I made the portfolio, what I added into the dividends sector. First off, we have Ford, which was paying a dividend at the time that we had it in here, and now it is again, so technically it does belong in here. So let's look at Ford. My largest position in this particular portfolio, this pie in the portfolio. I have larger positions. They're pretty big. Don't make fun of me. Overall, we see 50.3 shares here at a cost basis of $7.61 a share. Definitely picked up a lot of nice shares in the midst of a crappy situation last year when the stock fell ridiculously low. $611 in market gain and only $11 in earned dividends. Obviously, something that will be going up in the future as they have a dividend getting ready to be paid next month even. Kohl's the next one on there, mostly due to market gain as well. This thing has been an incredible in a market gain standpoint. We've made $524 in market gain and $19.60 in earned dividends. We have 18.3 shares here at $25.37 a share. This thing's been great for us. Look, I don't even have to go back every time. Iron Mountain. Position's worth $800 here total. We've had 287 in market gain and 77 in earned dividends. Obviously a really nice dividend payer on this one. 17.5 shares of this bad boy at a cost basis of $29.49. Not bad for a company that really pays a nice dividend. Gladstone Capital, another pretty nice dividend here. We've made a lot in terms of market gain actually on this one. $214 or and $86 in earned dividends. This has been a nice payer here. And as you can see by the percentage return of 139, this thing's been going up pretty nicely for me. 68.36 shares at $8.75 a share. Good to see. $800 position here. It's doing great for me. Realty Income. This one's been nice. I mean, look, it's a monthly dividend payer. I like it a lot. It's been a consistent rock. Overall market gain only at $74, which isn't bad at all. And earned dividends of $43. Look, we'll take it all day. I mean, I'm a big fan of that. 11.3 shares at a $62 cost basis. Pretty nice. NRZ after them. NRZ market gain here of $136, pretty nice, and $66 in earned dividends, and that's even with them shutting down the dividend last year for a hot minute, and it's still not quite where it was. So again, this position, once they reinstate that dividend to where it was, this is going to be a massive dividend payer, and even where it's at right now, it's still a massive dividend payer, and they're still only halfway to where they were prior to 2020, and I think they'll get there within the next year. So really excited about this earned dividends number there. 71.3 shares at $9.03 a share. So, it's working out pretty well for me. OHI, now this one's been a stinker. And really it's only been a stinker in the last little bit. So market gain here, really a unrealized market loss of $124.65. But $88 in earned dividends is a fantastic dividend payer, over 10% yield. And trading very cheap right now, and definitely one that I'm interested in buying more of. This thing it's ridiculously cheap right now, and it's been getting hammered in the last 3 months. At 52-week lows, I like this stock. I really do. I like it a lot. Yeah. 27.9 shares, $32.19 a share on this bad boy. Look to be adding more. I do. Then we have Orchid Island Capital, another one that's been getting hit hard as of late here. Market loss technically of $68.34, but earned dividends of $95 is pretty significant when you consider this is only an $800 position. Really nice in the earned dividend sector, because that's technically my largest in the dividends so far. So overall, we are in the green on this one, thanks to that nice dividend number. So we take that all day. 162.9 shares at $5.19 a share. This thing pays monthly. It's a good dividend payer. I like it a lot. The newest position here is going to be Vici Properties, and you see obviously newest because we don't have dividends in it yet, okay? It's a great dividend payer, yielding over 5% at this point, right around 5%. Total market loss so far, $47.79. Just built this position up in the last month. So I'm excited to see where it goes. 27.8 shares at $29.53 a share. I'm excited to see where it goes. Welltower, it's been a great performer. We're back into the good ones, baby. In the green on this one, pretty nice, 77% as it shows there. $152 in market gain and $38.65 in earned dividends. 7.8 shares at $62.57 a share. It's been pretty nice for us. Brookfield Renewable Partners, been great as well. $112 in market gains, $34 in earned dividends. Obviously nicely in the green. 17.6 shares at $26.64. I love it. Love everything about it. Prospect Capital, another one. This has been just a fantastic position for me. Up 188 in market gain, and $88 in earned dividends is significant. Another monthly dividend payer with a fantastic yield, around 8%. 70.9 shares at $5.88 a share. Look, this one pays a lot of good cashish. Look forward to it every single month, baby. Every single month. Kimco also. Look at this market gain. Incredible stuff. $600 position, but we've got $234 of market gains here. Overall, look at that fantastic return. And $26.30 in dividends. Nothing significant, but it'll develop as we go along. 26.13 shares at $14.27 a share. Pretty nice. And the last in this bunch is a stinker, okay? It's been a stinker. Southerly Hotels, otherwise known as Soho. You know it. This one's been schmammered over the last little bit. We can't lie to you. Earned dividends. It quit paying the dividend, unfortunately, because I bought this in 2019. It quit paying the dividend in 2020. Hasn't come back yet. But I have really bolstered this position. I've built it up pretty significantly since then. So when they do come to returning the dividend, this is going to be a massive, massive dividend payer for me. Overall, though, market loss here of $109. But as you can see, we have 250.5 shares at $268 a share. When all things get back to where they should be, this thing could be paying me pretty significantly in terms of dividends, so I'm excited about the future prospects there. My overall largest position in the portfolio is going to be Apple, and you see why. Magnificent return on this one, $1,462 in market gain, literally doubled the money that I put into it, and $29.72 in dividends. Not a massive dividend payer, but it's a just great plus. We'll take it all day. 18.3 shares at $77.44 a share. We'll take it. We'll take it. Facebook, my next largest one, second biggest in the portfolio. And again, massive gains here. $945 in market gains on Facebook. Really nice percentage gains. We love to see it. 7.88 shares at $213.64 a share. I like it. One of the biggest outperformers, obviously, here is going to be NVIDIA. Kind of wild here. The cost basis is effed with NVIDIA, in case you were curious. So that is why it's showing me a $1,700 market gain when it's only $2,200 position. So it hasn't quite, 5x'd in value, believe it or not. What would that be? Let me see. That's 500. Yeah, it hasn't. I promise you, we have not gone 3.5x in value. I promise. The cost base is a little jacked up, but we're gonna take it. Look, what it says is what it says. Okay, 1,700 market gains, $1.92 in earned dividends. Obviously, the world's smallest dividend yield, but they pay one, so you can't be upset with them. 7.13 shares. That's legitimate. At 67. Or 76.79 a share, which it hasn't been there in a long time, so obviously not true. But that's okay. We'll take those all day, baby. Microsoft. What can I say? Another massive, massive winning position. $800 in market gain. Literally doubled the position again. Doubled it. Doubled the money. Double. We love double. And $20.23 in earned dividends. Very nice return on this one. 5 shares at $171.79. Would like to be a larger position, but that's okay. Disney, look, here's one that's kind of screwed the pooch as well. I kind of hate that phrase. It's kind of disgusting. It's something that PETA would probably do because they're disgusting freaks. But $94 in market gain was a lot higher as of the last couple weeks, but it's been kind of plummeting here. Okay, kind of plummeting. Overall return. Still in the green. We'll take it all day. Obviously, they don't pay dividend anymore. 9.79 shares at $138.47 a share. Still looking to add to this one. I like it a lot. After Disney, we have another great position in AMD. One I've also dabbled the money on. Double, baby. This is Russell Westbrook's dream right here. He's got wet dreams when he talks about the doubles in this one. Really, we'd rather have a triple-double, but technically we have a lot more than, doubles because a lot of them are doubling. Okay, this is Russell Westbrook's dream. He's got double digits in every stat line, which is impossible for him because he actually is terrible at basketball. Sorry, was that me? $507 in market gain here for AMD. Really nice stuff. 107% return there. It's nice. 6.48 shares at 76.62 a share. We'll take it all day. Costco, another brand new position for me. And I love Costco, okay? I love it. I love it. This is a position I've wanted to add for a long time, and I haven't. I don't know why I haven't. I don't know why I waited. Stock's at all-time highs, but I still added it because this is a company that just is... Look, it's a ridiculously great company. And they're going to continue to be great in the future. There's a lot of reasons why. They're already ahead of wage inflation. They're already paying more than everyone else. Membership base plus retail, genius. Membership plus retail is just fantastic. It's great strategies here, and I like to see everything about it. Overall market gain here, 78.75. This position's within the last month, and we've already made great gains on it. And a tiny 34-cent dividend. Not quite yet we're getting there, but we'll develop it. 1.77 shares at 501.67 a share. I wanted to buy this thing when it was 300 a share, but guess who didn't buy it? Then we have none other than Qualcomm. This has been a ridiculous winner for us as well. Can someone say it? Russell Westbrook's wet dream. I don't like saying that because he's a snake. No, Kevin Durant's the snake, but Russell Westbrook kind of looks like a snake almost as well. He just looks a little, something's wrong with his face. 336 in market gain, 12.91 in earned dividends. Not the main sector here, not the main earnings point here is not going to be the dividends. 4.47 shares at $100, 15 cents a share. Then we have IBM. Look, it's a stinker. IBM's been a stinker for me. We are in the positive, though. We're in the green because of the earned dividends. Yields over 5% on this one, so we like that. But the company, unfortunately, has just been headed in the wrong direction in terms of stock price. So $27 down on this one. 6.12 shares at $115 a share. It's okay, though. After IBM, we have none other than Google Alphabet here. Look, I don't need to say it anymore. Just look at that market gain. Look at the market gain, and you know what I'm going to say, baby. You know what I'm going to say. $359 in market gain. Fantastic. And obviously the position's only 640, so you can tell what that means. You can do the math at this point. Look. It's been a great position for me. We'll take it all day. 0.22 shares at $1,323 a share. So it's don't worry about that. I don't own a full share of Alphabet. Look, these are pricey shares. We're buying partials here. Thank you, M1 Finance, for allowing me to do this. Bank of America also performing pretty well. $234 in market gain. Earned dividends here, $14.51. Not too bad. 13.89 shares at $28.89 a share. We'll take it all day. Main Street Capital, also fantastic. $225 in market gain and $58 in earned dividends. Obviously, one I want in my dividend sector because that's why I got it for the dividend payments. But that's okay. $13.61 a share. 13.61 shares. $15.19 a share is what I meant to say. It's been a great one for me. We do have Amazon in this portfolio as well. Market gain here, $177. It's been nice. 0.17 shares at $2,499 a share. Obviously not full share because that's a lot of money. It's a lot of money, Mr. Jeff Bezos. Pepsico, we're up pretty nicely here. A very small percentage of the portfolio at this point, around 1%. I think it's 2%. Sorry, this is me being. I can't be defamatory like that. 93.66 a share. 18.99. 18.90 in earned dividends. 3.74 shares at 136.16. Then we have, what a shocker, SPHD is in here. Just an ETF, nothing super exciting on SPHD. And after SPHD, we have SPY. Again, nothing exciting, but we're up pretty nicely in SPY as well. After them, we're back to the real stocks, baby. Not a lot of ETFs in this portfolio. You may know that. Funds, they're a little bit lesser in this portfolio, and that's potentially a negative, but we take it as a win here because I think we're doing great things. Intel, now talk about a stinker. This one sucks for me. Down $61.74. Earned dividend, look, $26.97 is fine, but look at that terrible market gain. There's no way I hear that squeaking. I locked up that squeaky toy, and this dog has found a way in. I can't believe it. It is wild. 12.21 shares at 53.88 a share. I'm tilted. I'm tilted here. ABR, look at this. This is just a fantastic win. Do I need to say it? No, I don't. Market gain of 266, $79 in earned dividends. This is a beautiful position. Beautiful. I mean, I love this position. It's been great for me, and you see it on the Robinhood portfolio as well. 32.68 shares, $9.95 a share. This is just a ridiculous winner for me. ARI, also another massive dividend earner on this one. Market gain of $81 and earned dividends right around $83. Look, this thing's beautiful. 42.08 shares at $11.60 a share. It's been beautiful for us. What can I say? APLE, not quite as beautiful. The earned dividends all kind of happened prior to 2020 when they completely eviscerated the dividend. Now they've reinstated a 1-cent dividend. Nothing crazy though. $93 in market gain. We'll take it. We bought it when it was cheap. 38.63 shares at $12.68. We bought it while it was cheap last year, and it's been doing well. Lowe's is only a 1% of the portfolio, but I wish it was more because it's more of the double doubles, baby. 184.19, earned dividends of $6.54. Great position here, 1.41 shares at $118.11 a share. And the smallest position in the portfolio, the very smallest here, Royal Bank of Canada. It's been good though. 67 in market gain and $19 in earned dividends. 2.9 shares at $78.18 a share. That is my portfolio. I hope you're excited. Look, I'm excited. I love everything about it, and I hope you all have a great day and see what's gonna come. We're gonna do great things here.